What is going on, ladies and gentlemen? Welcome back to another Let's Talk Crypto. I am your host, of course, Bitcoin J. Hope everybody's having a great start to the week. There has been a lot of things going on this week, and we're going to jump into all of it. We're going to start off with where the market currently is right now. Then we're going to jump into some of the headline news that has been happening over the week, over the last few, well, since we last spoke, right? Starting off on Friday, we had some news come out on Friday. Then yesterday, we had some crazy stuff that really affected the price of Bitcoin. And then at the end of that, we're going to do a Bitcoin analysis. We're going to break down what's going on, what's my analysis for this week, where I think things are going, and what trades I'm currently looking at for the rest of this week, basically. And then at the end of it, if you guys have any questions about anything that we cover in today's video / podcast, then you could drop it in the comments. I'll be more than happy to answer those for you guys in our Q&A section at the end of this live stream. So without further ado, let's go ahead and jump right in. Let's start off with Bitcoin's price. Let me move here to the daily so we can really see what's been going on here. And yeah, it's been crazy, guys. Last time we spoke was, what was it, last Tuesday or Wednesday? I think we were sitting around $27,000 probably, towards the lower end of the 20s, right? Well, right now we're currently sitting at $28,429. So we've gone up about $1,000 since we last saw each other last week. And we have this massive candle and wick to the upside here that we need to talk about. And we'll jump a little bit more into that during our analysis. But yeah, it's been pretty wild. It's been a wild day, right? So let's take a look here at what the rest of the market has been doing compared to Bitcoin, right? So just by starting off by looking at this in the last week, we can see Bitcoin's up almost 4%. And everything else is kind of flat. We have BNB up a little bit, but we do see Solana up almost 11%. It's up 10.5%. So this is one of my favorite DCAs right here is probably Solana, because it's been moving a lot with Bitcoin. So it's an interesting one there. And not really much else as we drop down here. Bitcoin Cash is up 6%, and OKB up 7%. So in the top 25, those are the main ones there. If we take a look at the top 100 overall, what the top gainers and top losers are, we can see Bitcoin SV is the top gainer in the last week, up 15.8%. Then we got Roll Bitcoin up 14.6%. Solana up 9.6%, Stacks up 8.7%, and ApeCoin up 8.6%. On the top losers side, we have Mantle down 10.5%, Sui down 8.9%, Thorchain down 8.8%, Radex down 8.5%, and Tezos down 6.8%. So let's go ahead and take a look at the economic calendar here. Let me refresh it here. And usually what I like to do is go to the most important things on the calendar. I don't really care for if you just go to the least impactful ones. There's a bunch of things here that, you know, it's just noise, right? Things that you really it doesn't matter. You don't need to know. So I go to the 3 stars here, the most impactful things on the economic calendar. And you can see this week is pretty much a quiet week compared to last week. Last week we had the FOMC minutes on Wednesday and the CPI data on Thursday. This week, the main thing that we're really going to be paying attention to is on Thursday, October 19th. We have the Fed Chair Powell speech. Okay, so why is that important? So he's gonna be speaking, Aaron. If we look forward to November, you will see on the 1st of November we have the Fed interest rate decision. So that's why this is important here, because this will be the last time that he speaks before that November 1st interest rate decision. So it's basically our last shot at trying to figure out whether they're going to raise interest rates, if they're going to pause interest rates, or if they're going to cut interest rates. They've already said over and over they're not doing any cuts this year, so I'm not expecting any cuts. The market's not expecting any cuts. But we're still trying to figure out, since inflation came in a little hot, it came in above what was expected by 0.1%. We're wondering if they're going to raise interest rates one more time or not. They did say in the past that they planned on raising interest rates one more time this year, but we've had 2 pauses in a row. So the market's kind of unsure. We don't really know what they're gonna do. So it'll be interesting and that's why this is going to be important in case he gives any type of insight or hints on where they might be leaning for that interest rate decision. So depending on what it sounds like, where they're leaning, the market is going to try to front run it and price it in, because as you guys know, the market loves to front run everything, right? So let's take a look here at the probability, the target rate probabilities for this meeting. As you guys can see, the market is expecting a pause once again, right? 87.9%. So a pause is expected in that meeting. If there is no pause, then we could see, if there's an interest rate hike, we could see prices definitely drop across all markets. A question that I had the other day was why inflation. So basically, why CPI and PPI data rising? Why it has been good for the dollar, right? Because it sounds counterintuitive if that inflation is rising and the dollar rises with it, right? Sounds counterintuitive, and then Bitcoin drops down. So that was a question that I got the other day, and for those wondering that, the reason why is because when PPI and CPI data comes in hotter than expected, it means a couple things, right? The first thing is they're probably going to raise interest rates. When that's happening, in order for the Fed to control the inflation, the tool that they most likely are going to use is raise interest rates, right? So what happens if they're raising interest rates? Now, basically, assets are going to drop, right? That's just what happens usually, right? Assets drop when interest rates get raised, especially high risk assets like Bitcoin. And Bitcoin is, even though Bitcoin in some contexts is a hedge against inflation, it is still a risk asset, and it's put in that basket. So when risk assets go down, then so does Bitcoin, right? And then the other thing is when they're raising interest rates, that usually brings in more foreign capital, more foreign money into the United States, because they figure that they're going to raise interest rates. So if they put their money in the dollar, right, which when in turn they raise the interest rates, then the dollar is going to go up. That means that they're going to gain money versus whatever their currency is. So that's why other countries start to put money in the dollar. And then, of course, that's a chain reaction to, if there's less money in the market, right? If there's less of it, then also that takes the dollar up as well. So everything's kind of a chain reaction. And it's all based off the idea that interest rates are going up if CPI and PPI data is high. So that's usually how and why that plays out in that way. Because as we've seen, if we look here at really quickly at the chart of DXY, which is a dollar, you can see that when the CPI and PPI data came out last week, it went up. And now yesterday we had a down day once again in the dollar. And before that, last week, it was going down. So we've spoken about the dollar a few times here. We'll talk about it here during our analysis, but just to kind of give you guys an idea of what it is that we're looking at there. So let's go ahead and jump into some of the headline news that we've come across, that we've seen this week. Really quickly, I'm looking here at the chat. I see Martin in here from London town. What's going on? And we have 300 Rivers. What's going on, Rivers? I appreciate you tuning in here as always. Always supporting the channel here. Appreciate you guys. So let's go ahead and now take a look here at the headlines for in the past week. So let's start off with last week. The headlines for last week, which was inflation remains at 3.7%. Basically, inflation came in. It's still kind of hot, but the market didn't really react too much to it. We didn't see, prices really go up or down. So it's kind of a non-event, right? The next thing was on Friday, we got this news from the SEC that was pretty bullish for Bitcoin. The SEC will not appeal court decision on grayscale spot Bitcoin ETF. So the reason that this is bullish is that this pretty much means that the ETF is probably going to get approved here, right? If you guys don't know, the SEC has been under fire because they have not been approving the Bitcoin ETFs, and basically they've given no pathway on how to get approved for Bitcoin ETFs, and they refuse to regulate or to give out any type of regulations on anything that's crypto related, or even answer questions that's crypto related, right? Every answer to every question is they basically beat around the bush because they don't want it to eventually get used against them down the line. So they don't want to answer any questions, basically, right? Now, this was definitely bullish for Bitcoin overall. And then after that, we got this news right here. Let me move this over here. That Bitcoin ETF 90% shot at approval by the SEC in January 2024. So this came from a Bloomberg analyst. Basically, he said, I've gotten a lot of questions regarding my current view on spot Bitcoin ETFs over the last couple of weeks. This is the first section of the note I put out yesterday with Eric Bachunas, however you say his name. Our view hasn't changed much, basically. They say, we believe there's a 90% chance of approval by ARC's January 10 deadline. So that's definitely a lot of things are looking up, and that's why before what happened yesterday happened, we got a push to the upside, right? So if you guys saw on Sunday, Bitcoin went up and closed at, let me see, because we were at 26,000. We're like in the mid 26,000. On Sunday, it pushed up. It closed at above 27,000 once again. And then on a Monday morning, it pushed up to 28,000, right? And then when this other news came out, then that pushed the price above 28 to where we currently are now. We'll talk about that a little bit more now in a few. But that's, that all came based on basically, kind of, this was a driving factor in that beginning stages that really started pushing that price up for Bitcoin there. So after all that, other things that have been happening as well is, of course, the FTX scandal, basically court case with against Bankman-Fried. And basically last week they had his ex-girlfriend and the former FTX CEO Carolyn Ellison, saying that that he directed her to commit crimes for the exchange. So basically, it feels like they're paying, or not paying, but they're reducing other people's sentences if they just go in and go basically straight at this guy. And that's exactly what's been happening. You can see that that they also, that she spoke about that they also conspired to keep Bitcoin under $20,000, and the way that they did that was by selling customer funds, customer Bitcoin, right? So that is pretty wild. You can see that it conspired to sell Bitcoin to artificially suppress prices below $20,000. So, I mean, when you talk about bad actors in the space, guys, this is the epitome of bad actors in the space. She also admitted that they use customer deposits to cover Alameda debts, also at totaling around $10 billion. So that is wild. What else did we get here? On the to-do list, they were trying to get regulators to crack down on Binance. So that was part of their to-do list that SBF had and had given Ellison, right? And I mean, guys, this just continues. You can see Bankman-Fried used customer funds for real estate investments. SBF used stolen funds as political donations. And that was basically it. But basically, it was her and former senior FTX executive Nishad Singh that were just kind of testifying and basically putting all the blame and all the fault on this guy right here. Practically the biggest fraud in U.S. history with what basically he did. The biggest bad actor in the space possible. And yeah, man, it was just bad. The more and more that comes out just shows how evil this guy truly was, and what a bad actor he was in the space. And the space is going to forever be way better without him. So we're glad that, even though it might have caused us some pain in the short term, when this all happened last year, for the overall of the market, the overall of this sector, the overall of the crypto community and everything, right? This is good long term. So let's go ahead and take a look at the big news this week, which happened yesterday. Fake BlackRock Bitcoin ETF report triggers a $65 million Bitcoin liquidation. It was actually bigger than that. It was around $140 million in liquidations just on the short side. So it was definitely a short squeeze. And that's basically what that looked like. But yeah, there was a huge short squeeze here where short traders were liquidated over $140 million. And then when prices dropped back down, then long traders were liquidated probably for like 30, 40, 50. So in total, it was almost $200 million in liquidation yesterday based on this fake BlackRock Bitcoin ETF report. And this came from Cointelegraph, right? They were the ones that put out the report. And they had to basically issue an apology that I have here, saying that they were sorry for that. So they said, "We apologize for a tweet that led to a dissemination of inaccurate information regarding the BlackRock Bitcoin ETF. An internal investigation is currently underway. We're committed to transparency and will share the findings of the investigation with the public once it is concluded within 3 hours." So within 3 hours, wow, that's a fast investigation. Did they share that? That's interesting to see if they if they ended up sharing anything. But yeah, that's basically what happened there. They were saying that BlackRock's Bitcoin ETF was approved. Then BlackRock came out and said spot Bitcoin ETF application is still under review by the SEC. So that proved that these rumors were false. But regardless, that created some massive volatility yesterday. If we look at yesterday's daily candle, let's look at that size, right? So from the open to the tippy top, that was over 12%, almost 13%, 12.8% move. And then basically we retraced that entire move from there to where we currently are right now. Let's see, down 7%. So it dropped 7. And this all happened within basically like an hour, right? We can see it play out here. Within the same hour, we had this move go up and it dropped right back down. So that was pretty insane volatility, but it's not a surprise. It's not a surprise that this type of volatility happens in crypto, right? So now the good thing is that this shows the type of move that is eventually coming once those Bitcoin ETFs really do get approved. So we know that these Bitcoin ETFs are eventually going to be approved, and this shows the type of move that we can expect once it really officially happens. So this was basically a $2,000 move within minutes and a $2,000 move back down within minutes, right? So this is basically what I'm expecting when these ETFs do get approved. I definitely 100% expect Bitcoin price to go up above that $30,000 mark, and possibly beyond that. Maybe if it were to happen this year, I would say we would probably reach new highs for the year, new yearly highs. If not, then it'll definitely set up new highs in 2024 when that does happen. So definitely bullish, and we can see that price has kind of grinded and consolidated ever since this, and it's kind of worked its way back here above and in that $28,000 area. So remember, $28,000 has been a really big resistance. So good to see a candle close above $28,000 and see it consolidating there in that range. And we'll break this down a little bit more here when we jump into our analysis. Let's close out the news segment here. Basically, another thing that's been going around in the last week is MetaMask was removed from the Apple Store, but then after it was put back into the Apple Store. So that's something to kind of keep an eye on there. Another thing, Binance to stop accepting new UK users. So I think this also happened with Bybit, which is a trading exchange. Now Binance is kind of doing the same thing. So this is really not Binance is doing. This is the UK that's trying to get all these exchanges out of the UK, basically. So that's kind of part of what's going on there. And then the last thing is Binance US suspends all USD withdrawals. Now, there's no reason to panic over this. All this means, if you have any USD, all you have to do is exchange it to a stable coin, and then you can withdraw it as a stable coin. That's it. There's no need to panic over any of this. You just can't withdraw it as USD is basically all that means. You need to exchange your USD into any of their stable coins, and then you can withdraw it. So no need to panic based on that news. And that pretty much wraps up the news segment for the last week, really. So let's go ahead and jump into Bitcoin price analysis here that we're going to do, as we always do towards the end of the video. Let me say what's up to Ducky Dave. Nice to see you again. Yes, sir. Doing another live stream. And again, if you guys have any questions about anything that we're talking about or anything that's going on right now, drop it in the comments. And after our Bitcoin analysis, I'll go ahead and do a Q&A at the end of this live stream to wrap things up. So I've been doing a lot of talking. I'm like almost out of breath. So let's go ahead and jump into let me make sure I put the chart here on the monitor for you guys, so you guys aren't staring at my forehead while I talk about this. And let me also pull up the Give me a second. Let me pull up my, where is this? I'm gonna pull up, remember on every Monday I do a market update report basically, and pulling up that report so I can kind of go over a few sections of it with you guys. And I do this every single Monday in my Discord, where I basically break down the entire market. I go over the charts. I go starting from the monthly, going down to the weekly, and then going down to the daily. Basically build out a trading plan around this report, and that's basically the trading, how we set up our trades, how we find our trades, how we trade based off that Monday report. So that's I'm gonna go over some of the stuff that I included here on the report. I'm not doing the full report. If you guys want full access to this, you have to join our Discord. So let's take a look. So we're gonna start with the weekly. I'm not gonna do monthly because we're halfway through the month. Not too much has changed on the monthly aspect, so there's really no reason to look at it right now. But let's look at the weekly. We're gonna start there. We're gonna start with the DXY a little bit, just to kind of take a look at where it's at. Let me put the monitor on. There we go. So we can see that last week basically it was dropping. And then we had a pump here when the PPI and when the CPI data came out. And then yesterday it started dropping back down. Now we spoke about this because if you go here, let's go zoom out to the weekly on the DXY. We can see we spoke about this last week where it's been trading in this range, right? Between this resistance and this support. And what we've seen and what we saw down here was a deviation to the downside and then this massive move up, right? And that could be something that we're seeing up here, a deviation to the upside, and we might, return to test some of this. Maybe not, I wouldn't say we're gonna go all the way back down here because last time we were down here was in July. So we might not return all the way down here, but we could get back within this range and once again start trading within this range. So something that we've been pretty much keeping an eye on, because as you guys know, Bitcoin trades directly against USD for the most part. So that's why it's always good to keep an eye on this. During this rally here, this was basically an 11-week rally to the upside in the dollar. Bitcoin dropped over 12%. So that's why it's good to know what's going on here with the dollar, and it kind of gives us an idea on what Bitcoin might do because it is directly correlated with it. So let's go ahead and jump into the weekly time frame for Bitcoin now. Let's look at one of the other charts that I have set up here. That's a bit cleaner. All right, so here the main things that let's first look at support and resistance here. Last week candle closed just above $37,000. You can see here the close was $27,149. Price currently is sitting above $28,000, as you guys can see here. And the main thing that we need to see this week is for this candle to close above $28,000. Now, yesterday we got our first official close on the daily time frame above $28,000, which is encouraging, and it's something that we wanted to see. Now we need to see the weekly also close above $28,000, because once we see that, then we can say that $28,000 has flipped from resistance into support. But until then, we're still in that range of the resistance levels. So that 28K is a major resistance level. So that's basically one thing that we're keeping an eye on right now. Support after $28,000, support lies around $27,000, $26,000, and $25,000. So basically the whole numbers, and $25K is of course the biggest support that we're gonna see here. As you can see, this is $25K. It's held up very, very strongly on both of these retraces here on the price of Bitcoin. And it set up what we've spoken about, which is that double bottom pattern here, where 28K is that neckline for that double bottom pattern. So if that does indeed play out, 28K is that neckline, and remember our targets on that double bottom pattern is about 55K or something like that. But of course, this is not going to play out overnight or in the next month. This is more a play into 2024, mid 2024 probably. So just something to kind of keep in mind, keep a lookout for the long term. Like we just spoke about, let's take a look at the different chart patterns. The main one was that one right there, the double bottom pattern that we just spoke about. Again, we need to close above 28K in order to confirm that break above $28,000 neckline. Let's look at some liquidity levels here. To do that, we're going to use a high block here. So we're going to look at the heat map. So this is a liquidation heat map. We're going to look at the monthly. That'll give us an idea of where the weekly is, right? So because it shows us the longer term perspective. So what we're looking for here and what we're looking at is the bright yellow spot. So you can see the brightest yellow spot right now is down here, and that's $25,800, right? So what exactly does that mean? So these are liquidation levels. So what this means is that people who are in long positions, if price drops down here, they're going to get liquidated or their position is going to get closed, right? So the reason that's important is because when it's bright yellow like this, that means that there's a lot of those levels, a lot of people, a lot of traders with liquidations in that level, right? And what happens, the reason that becomes important is because if there's big whales, basically big traders with a lot of money, and they're trying to fill a position, if they try to fill a position in an area where there's not a lot of liquidity, they move the price is going to move way too much, and it's going to give them a bad average price, right? So if they for example, if they wanted to buy right now, let's say MicroStrategy, right? They're buying hundreds of millions of dollars worth of Bitcoin whenever it is that they make a purchase. They have over $4 billion in Bitcoin. If they're trying to fill a position, they want for their position to mostly be filled at the same price, right? But if they end up buying in a spot like this where there's not a lot of liquidity, what happens is, since there's not a lot of supply and there's going to be way more demand than the supply, then the price is going to shoot up. And let's say that they start buying at 28,000. By the time they finish buying, they might move the price up to like 29, 30,000. So now if they move the price up to, let's say 30,000, now their average entry is $29,000, and they started at 28,000. So it's not good for them, right? They lost out on a big move. They lost out on profits because there wasn't enough liquidity in the area. So a lot of times these people are looking for these liquidity areas. So price tends to be attracted to those high liquid areas. So that's why that's an important level to always watch. And if you look back on this, you can see that whenever there's a bright yellow line, price seems to be attracted to it. So down here, up here, if we look again down here, and again, this was getting bright, boom, and went up there. And now the bright colors now are to the downside. So that's why we're watching these downsides, because there is a possibility that we go back to that liquidity. If we look at the 7-day chart here, and I'm gonna just kind of zoom in a little bit here, we can see kind of the same thing, right? We've taken out all the liquidity to the upside, so there's really not much liquidity up there. That means that there's not a lot of traders that are short right now. But there's a lot of liquidity to the downside. This is $26,400, a lot of liquidity there. So that's an interesting area for the price, right? There's a possibility, there's a scenario that price could drop down to where that liquidity is. So remember, The liquidity usually attracts the price. It's usually like a magnet for the price. Not saying that it's guaranteed or that it's always going to happen, but there's always a likelihood of it happening. So that's why it's something that we like to watch and keep an eye on while we're doing our analysis, right? So coming back to the price here, the weekly chart here. Next thing I like to look for is, okay, so now we know where the support and resistance is. We know where what chart patterns we're currently kind of seeing here. And we know where our liquidity levels are. So now let's look for imbalances. Are there any imbalances that haven't been filled? So what is an imbalance? An imbalance is when you have basically a big move like this. So this leaves an imbalance in between. And what usually happens is price retraces that candle, right? So when there's a big candle like this, you'll notice that a lot of times, what does price do? It moves back, and it doesn't always do 100%, but it usually likes to do at least 50%. So you can see that the 50% on this candle was basically right around here, $27,000, and that was filled, right? So we no longer have that imbalance there. Now we have this here. Now this is this week's candle, so it's not really considered an imbalance yet because it hasn't closed. Once it closes, then we could start considering that as an imbalance. And again, if we just kind of look back, look at this massive, massive candle, and what did price do afterwards? It filled it, right? It filled that halfway point 2 weeks later, basically, and it grinded back up. And again, it filled it 100% a few weeks later, right? A month or two later. Again, massive candle to the upside. What does price do after that? It starts dropping down and eventually fills that candle. And, if you look further back, because it doesn't always fill it completely, but look at this one here. This was a massive candle up, and what did price do? It did continue up for a bit, but then it started grinding down, 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 and it filled about that 50%. If we look here, that 50% is probably around here, that 24,500 area, I would say. And you can see that we hit it here and we hit it once again here. So we filled that 50% mark on this massive, massive candle. Again, if you just keep looking back, you'll see it over and over again. It just happens so often. You'll see this candle here, it wasn't filled 50%, right? 50% would have been around $19,000. Price only got to 19,300, so it missed it by a few hundred. But you do see that price did retrace back down to try to fill that 50% part. So again, doesn't always happen, but you will see it for the most part. A lot of the times you're going to see that price retrace a lot. So something to keep in mind, and that's why this is something that we look at every single week, not only on monthly candles and weekly candles, but also on daily candles. So you can see right now, there's really no imbalances in the chart from here, anything immediate. So after we know that there's not really any imbalances, we move on to wicks. All right. So wick is similar to imbalances. Price, whenever there's a large wick in either direction, price likes to retrace and likes to retest that wick. So we saw here when we left this wick up here, eventually price went and retested that wick, right? We left that wick there. Once again, price retested it a bunch of times. And then we left this wick here that didn't get retested for a while. But you'll notice here, when we left this wick here, even though it didn't retest it right away, look, eventually it came back and retested that same area. And you'll see that again over and over and over again. You can see right now the most immediate wick is, of course, this one that we've left this week. But since the week is not over yet, we're not counting it towards it right now on the weekly time frame. But we do have one down here that hasn't been retested yet. So that is an interesting one because that's down there at that $25,000 area, which is the major support, and it's the same area where there's a lot of liquidity down there, right? So it does make the case for a scenario where Bitcoin can retrace down to this support one more time. So that's just something to keep in mind there. Now, as far as that's pretty much you know, the weekly. Let's kind of zoom into the daily here, and take a closer look. And like that, I can also share some setups, some trade setups that I'm looking for here on the daily time frame for this week. So of course, we're taking everything that we just spoke about on the weekly time frame. We're pretty much doing it again on the daily, because now everything is different here, right? If we now go really zoom into this liquidity here, these liquidity pools, the liquidation levels, kind of zoom in here, things look a lot different, right? Now we can see that we do have some liquidity at the top, and that's currently around 28,600. And what happens a lot on these immediate time frames, on these smaller time frames, is that liquidity builds up above the highs and below the lows, the recent highs and recent lows. So that's something that always happens. This is why a lot of times people like to use breakout trades, right? Because there's a lot of liquidity there, which could push the price further if we hit those pulls, because that means that there's liquidations happening there. So on these smaller time frames, again, the main levels here that we're going to be kind of that kind of are catching our eyes, 28,625, and then lower at exactly at 28,000, right? So those are the two immediate pulls that we kind of have our eye on. And now as we look at as we analyze the daily time frame, we kind of have to keep that in mind. So supporting resistance, pretty much the same thing as a weekly, right? We're looking at 28,000, the main support. You can see yesterday was the first candle that we've had in, let's see, since this drop basically back in August above $28,000. You can see how many times it tried to get above $28,000 and got rejected. Well, we finally closed above it. Now, doesn't mean that we flipped it yet. We still want to see that weekly close above 28,000, but just something to kind of keep in mind. Now, one thing that we are seeing here as far as a pattern is this bullish pin bar here. So usually when this candle, if it closes like this by today, by the end of the day, that's usually pretty bullish, right? That's a bullish pin bar, and that means that it went down. Sellers tried to push it down, but buyers came right back in and bought it all up, pushed the price right back up. So something to keep in mind, something to watch there as this develops. If this closes here, then we might be seeing a continuation to the upside to test that $29,000 level. Here on this chart here, I have a lot of the levels drawn out a bit more. So you can see at 29,000, we basically have this Fibonacci level up here. So that's going to be another big resistance area for us to get above. And to the downside, of course, we have $28,000 is playing as a support right now. But until we get the weekly close above 28,000, I'm not going to consider it a major support just yet. And then when we go lower, we have basically 27,000 is another support level there. Under that, we have 26,600, 26,200, and then basically comes to that 26,000 to 25,700 range, where we can see price and support has held up there for a pretty long period of time there. So basically, what we're going to be doing here, what we're looking for here is the next thing is imbalances, right? We know this candle, this has left a big imbalance, right, in price. And as we all know, price likes to retrace those big imbalances. So that could be a potential move. Let's say if it were to fill halfway, that would basically bring prices down to about 27,700, 27,600-ish, right? That could be a potential there. If we're thinking that this imbalance gets filled. We already looked at liquidation levels. They're sitting at 28,000. As far as wicks, same thing. We know that wicks like to get filled. This wick is all the way to the upside, so it might not happen right away, but it is something that we might see grind up slowly, right? And then basically the way that I'm playing this week is I'm right now I am in a short trade from $28,500. So I'm in a short until I see the weekly candle close above $28,000. I'm still treating $28,000 like a resistance level. Okay, if I see that price is really holding up well at 28,000, then I might just close out the trade. Or if I see the weekly candle close above 28,000, that'll be another signal for me to close out my short trade. So I have my stop loss right about where this Fibonacci level is at, which is sitting around 29,200. So right about there is where I have my stop loss, just below it probably. And that's kind of how I'm playing this for right now this week. I'm going to be taking profits at $28,000, which we actually hit today. As you can see here, we hit 28,059. And I would like to see it retest these lower levels, and possibly even this right here, which was the previous resistance, which is around 27,700, which also happens to be the halfway of this big candle. So of this imbalanced candle, right? So that's an interesting play for me, and that's kind of how I'm playing this week. Again, I'm looking for two different signals to get me to close my trade out, my short, or if it hits my stop loss, and obviously I close out my trade there as well. That's pretty much what I'm doing this week. That's pretty much how I'm playing it. If we were to break above 29,000, I'd have to reevaluate at that point and see where we can potentially go from there, because then once again we have $30,000, a big resistance there. So I'm really not looking to long 29,000. But if we do see a close from the weekly here at 28,000, then it's a potential long opportunity here. So, but again, it's something that we have to wait for the end of the week in order to really reevaluate and see how that might play out. All right, we've been live for 52 minutes, guys. I am going to see if we have any questions here. If not, then we're going to wrap things up. If you guys have enjoyed this video, don't forget to smash that like button. Don't forget to subscribe to the channel. It really helps us out to, with the YouTube algorithm and all that other stuff that I'm sure you've heard in other videos before. Let me see. I'm looking to see if I have any questions here. So Martin said, how can one report spike the market and have ETH Wells stopped selling? So how can one report spike the market? Well, the report was kind of a big deal, right? They were thinking that that Bitcoin the Bitcoin spot ETF that has not been approved in years was gonna finally get approved, and not only get approved, but it was gonna be the BlackRock ETF, which BlackRock is massive. It's the biggest hedge fund, right, with trillions and trillions and trillions of dollars under management. So that was a really big deal, and that opened up once one ETF gets approved, that opens up the door for all the other ETFs, all the other hedge funds with trillions and trillions under management that are trying to get theirs also approved. So it's gonna bring a lot of money into the market once that happens. So it's only a matter of time. So that's why that report sent the price up basically $2,000 within minutes. And then once they found out the report was fake, it dropped it by $2,000 again. So that's definitely that was huge. And the other thing, have Ethereum Wells stopped selling? I'm not sure. And again, I don't really look too much into other altcoins. For the most part, I'm following Bitcoin, and eventually they follow Bitcoin as well. So if we kind of look here, so you have to look at the Bitcoin dominance, right? I'm sure Bitcoin dominance over the last few days has gone up, as you can see. So when Bitcoin dominance is going up and Bitcoin's price is going up, that means altcoins are usually dropping. But what happens is eventually that flips and the altcoins start to catch up and outperform Bitcoin. So even though the price is currently being suppressed a bit here, let's look at the week. Look at it from the weekly time frame, so we can have a bigger idea. You can see that we have the big support down here at around $1,100 to $1,000, right? It's a big Fibonacci level. So it's a very big support here. Then we had the move up all the way to about $2,000. We got rejected, and we've slowly basically dropped back down. I'm expecting, especially if we expect Bitcoin to retest $30,000, I'm expecting Bitcoin to once again, Ethereum to once again retest, these levels up here, $1,800 and beyond. So I'm not too worried about it. Long term, I'm not worried about it. So I think everything will be fine with that down the road. Do we have any other questions? Rivers says, click the thumbs up, everyone. Show the channel and their efforts to keep us current. Some love and respect. Appreciate you, Rivers. Ducky Dave said, good to see another stream. Yes, sir. Appreciate you being in here. And FD White said, nice. Would love to collaborate. Yeah, for sure, man. Just shoot me a DM on Twitter or Instagram. Would love to hear what you have in mind. That's pretty much it, guys. I'm going to wrap things up. We're almost on an hour here. Thank you guys so much for tuning in, for everybody that tuned in. Once again, we'll be doing this once again next week. As you guys know, we do this once a week, every week. Basically break down the entire market, everything that's going on. We'll do this again next week. Appreciate you guys tuning in. As always, peace and love.